All right, we are live here with EtherFi and our CEO Spade. We're going to be talking about eBTC today, as well as Bitcoin Summer. So, Slater, maybe a good place to start would be on EtherFi for people that aren't maybe familiar with it. Could you just give an overview of like what EtherFi is and what your guys' mission is?
Yeah, absolutely. And I'm just retweeting this as we go. Here we
The
go.
multitasking
Done.
is intense.
Here we go. Yeah, so EtherFi originally started off as the leading liquid restaking token provider. So when Layer kind of first came out, we were one of the first entrants into that space and kind of just executed really well. We're able to not only kind of win the vertical, but also continue to scale in the general LST vertical. And we've brought our TVL up a few 100% this year and are now at around 12 billion in total. And a lot of that was just really uh, providing a trustworthy like customer relationship where we just made sure to execute properly and deliver on all of our timelines and roadmaps and treat the customer well. But the other part of that was then expanding to different asset classes, right? And so we launched then eBTC, which is a restake version of Bitcoin. We originally did with Babylon and now Lombard. We'll get into that more. Um, and then we did EUSD and continue to kind of scale out other assets. So recently we launched a Hype LST in partnership with Hyperbeat. And then an additional part of it is our liquid vaults. So it's kind of become a big trend in the last year or so is these curated and risk managed vaults that can deliver higher yields if the user wants to opt in to kind of the additional layer of smart contract and economic risk. And so those are built on top of our restaked assets and aim to deliver a higher net reward than you're able to get with just restaking. And finally, we've expanded into our cash product recently, which has kind of defined this new trend of DeFi neobanks that you're starting to see a lot in your timelines. A DeFi bank or a neobank alternative is a solution that allows you to kind of save and spend all from one account. So EtherFi provides a pretty comprehensive solution with our restaked assets with different denominations, different asset pairs, and then our liquid assets on top of that. And then finally, the ability to actually spend in real life, get cash back, and kind of use it almost as a full bank replacement, but you keep self custody and it's still aligned with DeFi values. And so that's what we're moving towards, but it's still always a huge priority to make sure the assets are useful in and of themselves throughout DeFi, even if you don't want to connect it to your kind of cash spending account. And so we're always excited about stuff like Neutron and giving more opportunities for the eBTC asset, which again we'll dig into a little bit more what that is comprised of in the details there. But yeah, that's the overview.
Sounds good. Yeah, that's pretty comprehensive. I was going to ask you if you could give a little overview of like eBTC, the asset, like how it works, like how does it, is it yield bearing, and if so, like how does it generate the yield? Just for people that might not be familiar with it.
Yeah, for sure. So started off going directly through Babylon, but recently transitioned to a Lombard vault. So Lombard is kind of the 100% of the composition of eBTC is LBTC, and EtherFi is just kind of a derivative of that for users that prefer the EtherFi brand and the kind of incentives and distribution opportunities that we can provide on top of the asset. And so recently, Lombard launched their token, and LBTC did become a yield-bearing asset. So I can't speak to what exactly the yield is today, but you can always check on our website. And the majority of the yield is coming from restaking rewards for Babylon and Lombard, and yeah, just continuing to add more kind of real yield opportunities inside of the asset as well.
Speaking of real yields, so eBTC positions on Neutron, which we'll talk a little bit about, those enable eBTC holders to earn real yield on their holdings. In your opinion, like why do you think real yield on Bitcoin is important for our industry or for Bitcoin the asset or just for the user in general?
Yeah, it's a great question. So I think Bitcoin kind of started off as like never touch it, store of value asset, but both from the DeFi side and the general kind of shared community of crypto and people being like, well, I'll hold ETH, but I'll also hold BTC, and I'm interested in this DeFi stuff, and I'd like to make this asset productive, that has led to a lot more users who are interested in actually deploying their BTC and earning yield on it in various ways. So it's kind of just become a trend in DeFi native world generally. But then on the other side, we also have the rise of institutional crypto, right? And so those asset managers are generally very used to earning yield and putting their assets to work in various ways in traditional finance. And so we've seen a lot of financialization with kind of the ETF wrappers and things that are going on with crypto and TradFi. But we also see that kind of cross pollination, right? And some of those institutional asset managers wanting to then use DeFi as the way to produce yield on those assets. And DeFi is kind of made for that, right? And so I think it's important that the mission that you guys kind of have and more and more protocols kind of serving that need at a bigger and bigger scale. I think the growth of that industry and just kind of need for yield on Bitcoin and making it productive is only going to continue to grow as people get more comfortable with it, as it gets more embedded in institutional finance, and as more people start using DeFi. So yeah, I think it's a really important niche.
Yeah, yeah, that makes a lot of sense. Spade, do you want to give us an overview before we dive into the eBTC opportunities in Bitcoin Summer of what Bitcoin Summer is and what was kind of the inspiration for launching it?
Yeah, of course. Can you hear me well?
Hmm.
Okay. Yeah, I think, and to touch on Slater's point, like I think Bitcoin is undergoing a shift right now, which is basically it's financializing more and more as an asset. And so we're seeing so like different preferences around the asset start to sort of like express themselves. And one of the things that like we've noticed when looking at, assets that have gone through the cycle already, and notably like Ethereum, Solana, and others, is that there's a number of trades that DeFi is particularly well suited to serve. And by trade, I mean like a convergence of different risk preferences from different participants or like expressing themselves in a way that's like beneficial for everybody, right? That's a trade, right? For example, if you want to trade perps and be fully degen and I have a bunch of capital that's sitting idle and I'm okay to underwrite your risk, right? We can come together, form a perp protocol together, and then everybody is benefiting from it. You get to trade, I get to like earn yield. So that's a trade, right? um, well, so there's one such trade that is absolutely massive in DeFi, that has sort of like been kind of like this cornerstone of the financialization of other assets like ETH that just hasn't ever been unlocked for Bitcoin. And that trade is like the leverage looping trade, right? In its essence, it's like it's an arbitrage of the rates, right? And the risk reward preferences of different participants, right? Some participants are really passive and conservative. They're open to taking some minor amount of risk in order to have like a more productive position, but they want to be really conservative with it. And others are like full on degen. They're open to taking on leverage and to managing a position actively in order to really maximize these rewards, right? And so the way that it works for other assets, like most proof of stake blockchains actually have this going on right now, right? Like for Ethereum, that's like billions of dollars on Aave and Morpho and such, where people deposit wrap stake ETH. They use that collateral to borrow more ETH at a cheaper price, right? So they're earning, let's say, 3% from the staking rewards. They're spending, let's say, 2% on the cost to borrow ETH, and they can use that ETH to make more staked ETH and so like loop this and like do this multiple times, right? In so doing, what's interesting is that it creates a few things. Like first, it allows these more risky participants, more active participants to like have access to higher rewards, right? So for them, it's like satisfies their preference for like more risk, but also more rewards. And it also drives the borrowing costs of the underlying assets like ETH up significantly, right? Which sort of like creates space and yield sources for these more conservative participants, right? And so there's kind of like this, what we were talking about, which is that this like convergence of different cohorts of participants and their different preferences, basically, that to like end up being mutually beneficial, right? Well, that thing is what we're trying to unlock, but for Bitcoin, effectively, right? So you have assets that are like more senior, like for example, like EtherFi, BTC, and such, where we can unlock that trade in order to generate like a sustainable yield source for this. And you have the kind of like more senior, more experimental kind of like Bitcoin plus yield derivatives, and notably like Max BTC, which is like one of the most, I think, appealing, like the most appealing one in this category. And putting them together, you have the opportunity to basically unlock this risk tranching basically for Bitcoin. And from there, there's a bunch of things that sort of like happen from the perspective of like activity and such that basically create a bunch of opportunities down the line to build an entire ecosystem of primitives around this or like fundamental trade, if that makes sense, while generating kind of like yield and rewards for everyone involved, if that makes sense.
Yeah, yeah, no, that makes a lot of sense. And I guess from your perspective, Slater, Spade touched on this a little bit around the financialization of Bitcoin and kind of how, for other assets like Ethereum, Solana, we've seen this convergence around specific trades, like you talked about with leverage looping. For you, when you think about the financialization of Bitcoin, where do you kind of see the BTC-Fi market going over the next year or in the next few years?
Yeah, I mean, I think in the short term, the problem with Bitcoin DeFi has always just been that it's hard to get yield on Bitcoin because nobody wants to borrow it, right? Like it just trends up so much over time, and people have learned to kind of just hold on to the asset and stop shorting it. And a lot of borrow demand comes from shorting, and that's what creates yield, right? And so I think there's kind of two paths to Bitcoin becoming more and more practically financializationable, financialable. No, I don't know, but becoming more productive asset. And one is that it's just used as a balance sheet item for more and more large corporates in the U.S. in these very liquid markets, and then starting to create more derivatives of Bitcoin, like options, right? Like that's another way to produce yield at scale. And so I think TradFi generally has the kind of liquidity and sophistication to create products like that, which then generate yield on Bitcoin as an end source. And then in DeFi, um, we kind of just need more sources of yield, right? And so things like Neutron or restaking for Bitcoin, providing that extra bit of yield where now, okay, maybe it makes sense to borrow Bitcoin at a bit of a higher cost, or people are willing to lend it and do a loop, and all of a sudden that loop can actually become profitable because the yields from restaking rewards and additional rewards from Neutron, etc., have become high enough where it really starts to make sense, and all of a sudden leverage wants to pile into that system. I mean, the third thing is as Bitcoin reaches a greater and greater scale, maybe eventually the price does stabilize, and we've already seen volatility decrease a lot versus previous cycles, right? And as it becomes kind of more of a denominator unit, and just a more standardized currency, super liquid currency in the world, then maybe we start to see more borrowing activity because it's not so volatile. People aren't just getting like blown out if they want to borrow it for some reason. So yeah, I think there's a bunch of paths there, but again, I just think it's a really important category, and it's important that we keep innovating on it and finding solutions for it.
I think that's actually a really interesting thought. Like one other reason why I think we're likely to see this like increased demand for using Bitcoin in ways in DeFi is because there's also more and more competition around, securing a larger and larger share of the Bitcoin that is ever going to be sort of like circulating. And as sort of like that competition intensifies, there's likely going to be, participants that are like basically finding new ways to like amplify how much they're able to acquire in terms of Bitcoins, right? So that they can grow their NAV and stuff. And I think like DATs right now are like a huge vector of this as well, whereby like, as there's like more and more Bitcoin like treasury companies, right? There's also like a lot more innovation on like the strategies that they can employ to maximize how many Bitcoin per share they can acquire, right? So I think that's really interesting. Um, I had two like what you were sharing. I think like inspired me two things. Like the first one is, um, I think it's not just that as we work on these products, people will eventually learn about them and like them and so like adopt them. I think there's also like a more market driven thing, which is that if you create these, like right now there's $6 billion of Rapid EC that's just sitting on Aave and like basically earning 0.1% APR, right? So pretty much nothing, right? If you're able to unlock any one of these trades that is like sustainably creating better outcomes for participants, it's not just that like, oh, people will, consider eventually converting, is that it's going to create a suction effect whereby you have a very easy arbitrage whereby, if, for example, lending Bitcoin on Neutron is, 3-4% APR and lending Bitcoin on Aave is like 0.1%. Either the people who are currently lending will move to Neutron eventually, or somebody will borrow on Aave and lend it on Neutron and arbitrage the difference, right? And so one way or another, the Bitcoin ends up so like being allocated by the market to the most sustainable and so like efficient kind of like places. Um, and I think this like, the kind of like last point on this is you were mentioning it, and I think really rightly so, like there's a variety of strategies that people currently employ in order to generate yield on Bitcoin, and like, notably off chain, there's been sort of like the lending period of like, BlockFi and Celsius and such, like that hasn't, ended too well, but there's also been these like option strategies and such that that people have been employed that I think, are here to stay. The where I guess these two things can like converge is that, right now we're seeing them as like very fragmented things. There's like, oh, there's what happens in TradFi and there's what happens on chain. But I actually think that like the future of these things is kind of like a sort of convergence whereby like traditional finance, I think where it's really interesting is like the depth of these markets. Like today you're able to borrow in humongous sizes against Bitcoin, for example, right? You can use exchange traded Bitcoin products and borrow dollars against them at like huge sizes, which allows you to sort of like run trades that can generate yield at huge sizes as well, right? And I think like that kind of like liquidity and that kind of like versatility of the TradFi like mechanisms is like really valuable and can be combined and actually amplified with so like the unified ledger of DeFi, because that's really what blockchains are for, right? And I think like that's kind of like the value proposition of something like Max BTC, right? It's less about, oh, there's this one strategy that we're really bullish on, and let's just like tokenize that and make it available. The vision, I think, is like more expensive than this. The vision is, you know, there is an infinite number of ways that you can generate yield on Bitcoin, and what is the best way to do that at any point in time is going to evolve over time, right? Market conditions will change and stuff. And so rather than sort of like marry the product to one specific strategy, we will, the structure team is working on building kind of like an infrastructure that allows them to basically have one token that never changes, that represents so like all of these strategies and where the capital gets allocated to whatever is the best strategy at any point in time, such that you have this kind of like combination of, on the one hand, you have like the best hedge fund or the best strategy on the back end, and on the front end, you have like, this kind of like like a unified token that you can use in DeFi that is like obviously like more of a junior tranche in the sense that it's like it's more risky, right? It's like allocated capital, it's like doing a bunch of things and such, but you have this unified thing that can have liquidity in DeFi, that can have integrations with like lending and borrowing marketplaces, such that you can use this collateral if you need to access your equity, or if you want to take on leverage, you have access to this, right? And this is really where the unlock is, because some of the customers of Structured, for example, and I think this is like really the really interesting point, some of these guys are running such strategies, right? They're running options, they're running like JLP strategies. They're already making, like 5 to 10% APR on Bitcoin, right? But they're still interested in something like Max BTC. And like, why is that? Well, the thing is that if you're running it yourself, there's no way you can take on leverage, right? Like, because you can't tokenize and like build the same network effects with, whatever strategy you're running. But if that strategy is just the backing of an asset that has these integrations, then you can have this kind of like leverage looping trade, which basically allows you to take on leverage onto the trade that you're doing in the first place already, right? And this is where like kind of like the broader picture so like starts to come together, where it's like you have like the more aggressive like funds, the more aggressive participants and such, that all fall into this kind of like max side of the picture, right? And then you have the more like senior state, like the senior participants that are looking for stability and consistency, both in terms of the rates as well as like the risk profile, that go through a product like EtherFi BTC and just like go and lend. And the lending market in the middle serves as the interface that connects the risk and reward preferences of both of them, enabling the ones who want leverage to get it basically, and the ones who want stability to get that as well, right? And so through this, it sounds kind of like simple and dumb, like, oh, we're going to do leverage looping for Bitcoin, but it's actually kind of how you connect like billions of dollars in TradFi all the way to like liquidity and lending supply and such, like on blockchains effectively.
Yeah, for sure. I think those are really good points. It's important to have those different kind of offerings for players that have different interests and levels of risk tolerance, and it kind of just speaks to the whole theme of vaults and how it kind of marries the risk preferences of different participants with also the composability and simplicity of like having a final product that is tokenized and transferable and usable among all these different yield products. So I think that was really a valuable breakdown.
Yeah, I think
Yeah.
that makes sense. I think it's going to be exciting to be like, if you're an eBTC like holder and you're able to just like lend your asset and get 4% on that while also using the equity, like, with your card to just pay your bank, like, you kind of have it all, right? You have your cake and you're eating it too, right? On the one hand, you're able to use the equity of your Bitcoin in order to finance your lifestyle. You still get the whole appreciation of it because you've never sold actually. You get your collateral is appreciating thanks to the lending rewards that are generated through that loop that like Neutron and like EtherFi together can like unlock. So you're, like assuming that you're spending less than what you're generating, you're actually making money consistently as well without like on top of the appreciation. And yeah, and you're doing this from a very simple interface, right? And in the back end, there's a degen somewhere who's making 60, 70% APR on Bitcoin by leverage looping max BTC. Like, happy days.
Yeah. So why don't we talk a little bit about the actual opportunities that are available now for eBTC holders? Do you want to run us through that, Spade? Like what, if I'm an eBTC holder, like what can I do on Neutron with Bitcoin Summer?
Yeah, that's a great question. So, you know, just starting from like the overview and like going into the details, right? What we're trying to do is we're trying to enable a very simple trade, which is if I have EtherFi BTC, I want to be able to exchange that efficiently for any of the other forms of Bitcoin, and notably to max BTC, such that if I'm taking on leverage and effectively, going from eBTC to max BTC or closing my position and going from max BTC to eBTC, I want to be able to do that very efficiently, and I want to make sure that there's a lot of like lending supply available for EB.
Oh, we might have lost him. Well, I can pick up where he left off, and then hopefully he'll be able to join back. But yeah, right now, if you're an eBTC holder, like what the leverage looping strategy with Max BTC enables is fundamentally for eBTC holders to earn real yield on their holdings. And they can do that through lending their assets on Neutron, as well as providing liquidity to eBTC wrap BTC or eBTC Max BTC pools, um, which are enabled through Neutron Super Vault infrastructure, which market makes. Basically what Super Vaults do is they market make around the freshest price. So they pull in um, price feeds from off-chain venues, and then they market make at the freshest prices, allocating liquidity in two regions, like one right near that price, as well as a little bit farther out than that as well. And they enable traders to get the best prices on chain for swaps, but they also enable the LPs to maximize their rewards through ensuring that they're always providing liquidity at the best prices and preventing them from getting front ran, because what super vaults do is they provide liquidity at the top of every block. So before any other Neutron transactions can be executed, they leverage Neutron's cron module to effectively rebalance the liquidity around the freshest price before any other transactions occur. So this prevents front running, which happens on other AMM models. So that's good for the LPs, obviously, good for the eBTC holders. And so as the demand for looping max BTC increases, like we talked about, these people have different risk preferences. As more people want to earn max BTC yield, when max BTC becomes yield bearing in a few weeks, and they leverage loop that's going to give eBTC lenders and eBTC LPs on Neutron greater yield, in addition to the rewards that they'll already be earning through the campaign. So EtherFi, you'll be earning ETH5 points, depending on the position that you go into. And you'll also, so 3x EtherFi points, in addition to also earning Neutron rewards. And so you can see that on app.neutron.org/Bitcoin-summer. You can see the different positions on Neutron, what you can earn, and basically which protocol you're going into. So the ones that are amber are lending positions, and the ones that are super vaults are the LP positions. So that's kind of a brief overview of the opportunities available for eBTC holders, and they progressively get better and better, like I said, as max BTC looping demand increases.
Awesome. Yeah, that makes a lot of sense.
Yeah.
I got to run in just a second here, but just to recap it from the EtherFi side, use eBTC. It's a great way to get exposure to Bitcoin and also be able to use it in DeFi and do productive things. And I think we're really excited about this partnership with Neutron to kind of have a real interesting farming venue for eBTC now that it's yield bearing, especially combining that with a lot of the opportunities on Neutron may be very interesting to you. So if you want to participate with eBTC and go mint some, get the EtherFi points, participate in the Neutron Bitcoin Summer incentives, just go to ether.fi and check out the BTC page, mint some, bridge it over, and enjoy. And yeah, thanks a lot for hosting me, Zion. Appreciate the space, man. And,
Yeah,
we're excited about
absolutely.
this.
Yeah, thanks for coming on, man. We'll do this again hopefully sometime in the future. So